Let's bring in Paul Sankey. He's the lead analyst at Sankey Research. And the fundamental point here, Paul, is that these are prices so high, to Pippa's point, at some point demand destruction sets in. Obviously, that's not a good thing for producers.
Yeah, kind of. I mean, I think it's important to remember that the U.S. oil and gas companies have much better strategies now. So you do benefit from high prices for as long as they last. But ultimately, you're right. People worry that this is going to be very damaging, ultimately, for oil demand, maybe start pricing alternative fuels. Although, having said that, we've done a pretty terrible job of developing alternative fuels over the past 5 years. It's arguably what got us into this situation. But yeah, basically, that seems to be the concern. People taking profits at what they assume will be a near-term peak in prices.
And near-term peak in prices, it's sort of one or the other, right? If prices peak, you could see the stocks trading heavy. If prices keep going up, maybe they do. I mean, they've still performed pretty well, though. Who would you say is best positioned for the price that we're at?
Well, just let me say that I think if the Russia-Ukraine situation continues, we're going to lose more physical barrels of oil because of the way the contracts are structured. So we've lost, 3 million barrels a day plus of oil almost immediately. That could keep flowing through into markets and keep pressure to the upside. If we get a sudden ceasefire, if someone shoots Putin, there's a couple of things that could suddenly resolve this situation quite quickly. But then again, you could end up in a quagmire or a Putin victory, at which point we're going to have a long-term desperate lack of oil. In all of those scenarios, I still think the U.S. E&Ps are in very good shape. Several of them have excellent strategies regarding cash return to shareholders. They're very capital disciplined. They have good assets, good management, high cash return, 12, 13, 14% plus return to shareholders every year. I think that's worth buying, even if people worry about a near-term peak.
You think the best position names for the price rise, Devon, Diamondback, Chevron, Exxon, is that broadly correct? And what about who would be, in a way, not best positioned? Or where might we first start to see some headwinds among the sector?
Well, Devon has been confusing people because it's actually not been trading that well, but it was such a big performer and such a consensus long that you can see people taking money off the table there. Exxon's facing some relatively minor, but nevertheless issues with its Russia exposure. It's going to have to take probably quite a big write down there at Sakhalin 1. Chevron looks well positioned with a bit of risk in Kazakhstan, which is probably okay. And then most of the pure Permian plays, Diamondback you mentioned, Pioneer, ConocoPhillips are all very defensive. The guys that typically in oil that you would think would struggle in this kind of environment would be refiners, because obviously you kite the oil prices, their input cost, and people stop driving as much or get defensive about their oil use. And so refining doesn't typically do well in a very elevated, geopolitically driven market.
Absolutely. And we should point out that OPEC had an opportunity today to try to step up and fill the supply response that you're talking about, and they didn't do it. What do you make of that? And what options do they have to fill the gap from these Russian barrels?
Well, as your reporter Pippa pointed out, there were issues with OPEC cutting back, but they didn't push as much oil back into the market as we thought they would. And there was a huge effect, obviously, on demand from COVID. But I think what we're also seeing is there was significant reduction in investment owing to COVID in the upstream. So we simply stopped investing in oil and gas production capacity, and that's very much coming home. The Russians themselves were struggling even to produce to their capacity before this whole disaster. So essentially, there's been a major question mark over OPEC spare capacity. Having said that, I'm a little bit surprised Saudi and UAE, who have spare capacity, haven't done a little bit more to alleviate market fears here. But they may be worried, as I mentioned, that this can get worse before it gets better. And they would be better sitting on their hands just to see how this complete disaster plays out.
May help.
It's very early days yet.